Divorce in America does not begin with freedom. It begins with structural collapse. The legal dissolution of marriage triggers simultaneous disruptions across housing, income, insurance, credit, taxation, and daily logistics. Shared systems that once operated automatically are dismantled within weeks. A marital home may no longer be financially viable. One income must now absorb obligations once distributed across two. Mortgage payments, rental deposits, utility transfers, storage fees, and relocation costs generate immediate strain. Stability, previously assumed, becomes conditional and contingent on compliance with legal and financial deadlines. Financial infrastructure shifts abruptly. Joint accounts are divided or frozen. Liquidity narrows. Automatic payments must be redirected. Beneficiary designations change. Legal retainers, filing fees, mediation expenses, custody evaluations, and documentation requirements begin reducing reserves before long-term strategies are formed. For women in their 40s and 50s, workforce reentry is constrained. Caregiving interruptions reduce earning leverage. Professional networks may be weakened. Licenses may require renewal. Age discrimination narrows opportunity further. Income declines while fixed expenses remain. Economic compression begins immediately and rarely reverses quickly. Health coverage is frequently tied to a spouse's employment. That protection can terminate at separation. Temporary continuation options are expensive and time-limited. Private insurance premiums consume a significant share of post-divorce income. Deductibles and out-of-pocket thresholds rise in visibility. Medical decisions become financial calculations. Preventive care is postponed. Prescriptions are evaluated for cost before necessity. Stress increases without visible institutional acknowledgement. Health risk becomes layered with financial risk. Tax status changes. Filing categories shift from joint to single or head of household. Credits tied to marital structure adjust or disappear. Asset transfers may carry tax implications that are poorly understood at the time of signing. Retirement accounts divided under court order alter long-term security projections. Pension calculations shrink. Social Security benefit expectations shift. Estate planning documents require revision. The legal process may conclude within months, but administrative consequences continue for years. Daily logistics fracture. School transportation, medical appointments, tax filings, benefit renewals, insurance claims, and repair obligations concentrate in one person. There is no structured transition. The legal system demands immediate clarity, custody schedules, asset disclosures, residency updates, while emotional processing is postponed. Documentation becomes continuous. Deadlines accumulate. Administrative fatigue becomes normalized. Survival requires procedural compliance. The first stage is not healing. It is containment. Preventing further structural erosion becomes the priority. Divorce dismantles shared architecture before any autonomy can be stabilized. The collapse is administrative. Survival begins within that collapse and extends beyond it. Economic instability becomes prolonged rather than temporary. Household income contracts immediately. National data consistently shows substantial declines in post-divorce living standards for women, often between 30 and 40%. Two incomes become one. Housing, utilities, food, transportation, insurance premiums, child-related expenses, and maintenance costs do not decrease proportionally. In some cases, duplication of households increases cost. Expenses redistribute rather than disappear. The standard of living recalibrates downward. Employment instability compounds vulnerability. Midlife re-entry into competitive labor markets requires updating skills and rebuilding professional networks. Flexible positions often replace higher-paying roles when caregiving responsibilities remain primary. Flexibility substitutes for security. Earnings plateau, promotion tracks slow, benefits packages are narrow, retirement contributions pause or shrink, employer-sponsored protections become uncertain, asset division reduces long-term reserves. Long-term financial planning is deferred while immediate cash flow management dominates. Debt accumulates quickly. Legal expenses, relocation costs, healthcare bills, school fees, and daily necessities expand reliance on credit. Joint credit histories may leave residual damage. Missed payments during transition affect credit scores. Credit scores influence housing eligibility, loan access, insurance premiums, and even employment screening. Credit recovery is procedural and slow. There is no accelerated remedy. Financial rebuilding extends across years and remains vulnerable to disruption. Child support and alimony, when ordered, remain inconsistent. Enforcement varies by jurisdiction. Payments may be delayed, contested, reduced, or stopped. Court modification hearings prolong uncertainty. Financial planning becomes reactive rather than strategic. Month-to-month management replaces accumulation. Savings accounts are rebuilt gradually, if at all. Survival remains economic and continuous. Government assistance programs exist, but operate within strict eligibility thresholds. Application processes require documentation and time. Benefits may be temporary. Administrative complexity competes with employment and caregiving demands. Structural support is partial and conditional. Vulnerability persists even when assistance is granted. Divorce also restructures identity in institutional terms. Marriage functions as a recognized social category in the United States. It shapes legitimacy, stability, and access. It influences insurance eligibility, tax treatment, housing approval, and social perception. When it dissolves, social frameworks adjust, titles disappear, invitations alter, institutional responses shift. The woman remains the same individual, yet the structural context around her changes. Single parenting centralizes responsibility. Decisions regarding education, discipline, healthcare, scheduling, and finances consolidate in one person. There is no automatic distribution of labor. There is no guaranteed relief. Scheduling becomes precise. Childcare coordination requires negotiation across households. Transportation routes multiply. Fatigue becomes structural. Survival is measured in maintained routines rather than personal expansion. Social networks recalibrate. Married peers may withdraw intentionally or gradually. Informal support systems reveal limitations. Some relationships were anchored to couple identity rather than individual connection. Assistance becomes conditional. Geographic mobility may separate extended family support. Trust narrows. Social isolation develops without formal acknowledgement. Mental strain correlates with sustained exposure to uncertainty. Anxiety, sleep disruption, and chronic stress reflect financial instability, administrative pressure, and concentrated caregiving. Distress is procedural. It is linked to contracts, hearings, forms, compliance requirements, and recurring obligations. Reflection is secondary to survival. Emotional processing is deferred by necessity. Identity stabilizes gradually, but within constraint. Self-definition must operate independently of marital designation. Decision-making becomes unilateral. Boundaries are redrawn cautiously. Independence becomes functional rather than aspirational. It is enforced by circumstance and reinforced by institutional expectation. Long-term adaptation is gradual, constrained, and conditional. Court proceedings conclude, yet survival continues. Income may stabilize, but margins remain narrow. Housing security depends on uninterrupted employment and consistent health. Emergency capacity remains limited. Surplus is rare. Financial setbacks are absorbed without a buffer. Stability is conditional on variables beyond individual control, including labor markets, health costs, and regional housing trends. Career trajectories recover unevenly. Some women regain stability after prolonged stagnation. Others remain in constrained roles selected for schedule compatibility rather than advancement. Earnings growth may never align with pre-divorce projections. Retirement rebuilding is partial. Contribution gaps leave measurable long-term impact. Economic gaps created by divorce narrow slowly or persist permanently. Renting becomes prolonged. Ownership rates remain lower relative to married counterparts. Property accumulation slows or halts. Insurance premiums remain elevated. Credit utilization requires monitoring. Financial vigilance becomes routine. Documentation, budgeting, and compliance structure daily life. Survival is measured in maintained housing, preserved credit standing, and sustained employment rather than expansion. Children age, yet responsibility does not disappear. Educational expenses increase. Health coverage continues. Emotional labor remains centralized. Concern persists into adulthood. The pattern of vigilance becomes embedded and rarely relaxes fully. Social circles reform in smaller configurations. Trust is recalibrated through caution. New partnerships, if pursued, are approached with financial safeguards and legal awareness. Remarriage is not universal and often not prioritized. Independence becomes an operational necessity rather than a symbolic achievement. Divorce in America is not a temporary disruption. It is an ongoing survival condition shaped by legal systems, labor markets, housing structures, insurance frameworks, and credit institutions. It reorganizes access to stability. It narrows tolerance for risk. It requires sustained procedural endurance. Stability does not return automatically. It is constructed incrementally, documented consistently, and defended continuously. Progress is measured in maintained obligations rather than transformation. There is no singular victory. There is ongoing management. Endurance becomes institutional. Survival becomes procedural. Adaptation extends year after year under constraint.